Today we're talking about new tax proposals from the House Ways and Means Committee. And one of the things that they want to do is change some of the laws with regards to IRAs and Roth IRAs. So here's the big one. The first one is Roth conversions would be limited based upon income levels. And what they're thinking of is over $400,000 of income, or for single taxpayers, $500,000 for married, that you couldn't do a Roth conversion anymore. But that doesn't happen until 2032. So what that tells you is you still have some time to do conversions. Think about whether they make sense for you right now. And because this is a proposal, it could mean that this may be sooner. So you may want to get those Roth conversions in sooner rather than later. A couple other things is they want to eliminate conversions of after-tax dollars like in a 401k. So in a 401k, some 401k plans, you could put pre-tax money in, the company does some kind of match, but you can put after-tax money in, and then you can convert that after-tax money into a Roth IRA. What the IRS is saying, or what the proposal is saying, is no more. This would actually be effective next year if this goes through. Then there would be limits on contributions for large IRAs. Over $10 million. If you're someone that has an IRA over $10 million, then this would impact you. And plus, you'd have to start taking required minimum distributions at any age. So if for some reason you're one of those lucky few that has an IRA worth over $10 million and you're 45, you'd have to start taking required minimum distributions as early as next year. All right, to explain a little bit further, looking at our tax triangle, the tax deferred, tax-free, taxable. Tax deferred is where your 401k sits. In other words, you put money in, you get a tax deduction, it grows tax deferred, but when you take money out, it's taxed at ordinary income rates, which is the highest of rates. Now, Roth IRA, if you're fortunate to have a Roth IRA or a Roth IRA component in a 401k, it sits up here. You don't get a tax deduction when you put the money in, but all future money comes out tax-free, which is a pretty nice thing in retirement, to have some of your assets, some of your income coming out tax-free. At Pure Financial, we have advisors that are ready to talk to you about taxes, and I love to talk about taxes, and so do they, but we all hate to pay taxes. That's why we have a free tax reduction analysis, and you can schedule your appointment right online.